Merry Christmas! Hi, I'm Scott Mackenzie. Thanks for tuning into my December 2016 market update. It's Christmas time. Merry Christmas to you. Thanks to those who commented on my last video. I asked for some feedback. I got a few emails back from people saying they liked my shirt. Okay, thank you. Not quite the feedback I was looking for, but that's great that people are taking notice of these things. Alright, so where are we at? Review of 2016 quickly. We came out of 2015 on a bit of a downer. There were a lot of changes with LVR restrictions last year. Capital gains things came in, IRD requirements for overseas buyers, all this sort of stuff happened. But we hit January and the market came away again. People realised that it was still a good time to buy. They'd done their figures and realised why wait. So 2016's been pretty good through to about the middle of the year, where I had been nervous before that the Reserve Bank were going to put further LVR restrictions in place. They did, but the banks brought that on board straight away, and when they did, that took a bit of the gas out of the market as well. We're increasing a period, we're coming into a period now where people are actually looking ahead and saying, well, how much more has the market got to go? So it'll be interesting to see January, February if the market comes away again, or whether that sort of psyche of the buyers is in play. So in the winter we peaked around June, July in terms of price and activity. After that, prices actually stayed quite well balanced right through till just recently. What happened was the conversations I was having with people in September and October was that they would wait to January. They also couldn't get their houses ready because it rained every weekend for a while there, and it's hard to get a hold of tradespeople. But the majority just felt it wasn't particularly going to be a good time to sell this spring. What we've seen in the last few weeks is a little bit of a listing surge in November, and we've peaked 2 weeks ago in listings, and the reason for that, some of those people didn't want to wait till January because they see risk listing in January as well, and if they're ready to sell, why not just sell now? But also there were people who bought in the last month or two who have thought, right, let's get our property on the market and sell before Christmas. So November's usually the listing peak, but we had this surge all of a sudden. We hit 99 available listings in Glenfield, which is quite high. But the good news is that 2 weeks later we're down to under 80, which is a 20% reduction in available stock in 2 weeks. My hope is that available listing stock really does sell through or gets withdrawn prior to Christmas, giving us a nice low base in terms of supply coming into the new year. Do I really want prices to go up? Just to let you know, actually I don't really mind if they do or not. What I want is when people come on the market that they have an opportunity to sell and they're not sitting on the market for 3 to 6 months hoping to be able to sell when they need to move on to other plans. So my opinion, if prices can just edge up nicely, then that's great. People can sell their house if they need to. If I was a buyer, what would I do now? Well, interesting, I'm going to come to that shortly. What I want to talk about next is that when that listing peak came 2 weeks ago, we started to see people who had to sell or really wanted to sell take a little bit less. So we've still seen good buyer activity in terms of sales being made, but open home numbers are quite small. But we are seeing the odd person now take a bit less for their property. The odd one selling, say, 50,000 below what we thought. Maybe it might have got 850 in the winter, might take 800 for it now. So a little bit of a gap there. Some properties down 5%, and it depends who you talk to. If you talk out west, out south, they think they're down a bit. Talking to people in the bays, everyone has a different opinion. I actually feel that things are still selling around about what we think, but there's the odd one that gets less. Certainly there's not the odd one that sells 50 or 100k more than what anyone thinks. But there's some good results. One in Northcote the other day, for example, had 5 bidders on it, went up a bit on its pre-auction offer amount. One in Hillcrest the other week opened pre-auction at 900,000 and sold for 950, 960. So there are still some good news stories, but we're seeing less of them and more of the bad news stories. So looking ahead, next year, what have we got? Well, we've got a higher interest rate outlook with Trumponomics, but also the OPEC reached a deal last week to cut oil production, which boosted the price of oil by 10%. You'll see that at the pump this week, but also just means that with commodity prices recovering, Australia will start to invest in their economy. You'll see they actually had a downturn in the Australian market just recently, but companies are now looking to invest more as iron ore price, coal price, and now oil price are on the recovery. China's starting to recover and spend a bit more, which means it's more inflationary pressure. When inflation comes in, dairy prices going up as well. When all those things start happening, the interest rates will start to go up, and we've seen that. You could get 3.99% in the middle of the year for a 2-year fixed. My sources are telling me now 4.34 is the best you'll get on a 2-year home loan rate. Even the advertised rate cards sort of 4.45, 4.5, and interest.co.nz have a great graph, and you can click on any of the fixed terms, and they'll give you a graph of what the advertised rate cards are for those rates. Is really good. I'll post a link to that in the comments. So next year, interest rate outlook a little bit higher. Commodities prices recovering. That could lead to increased migration to Australia from New Zealand, so therefore less demand in the Auckland property market. A bit more construction going on with the unitary plan, things like that. The outlook is for more construction, offset a little bit by banks not wanting to lend too much to developers. And then the big one, the election. And so it could come at a little bit of a different time next year, with David Shearer looking to vacate his seat. They may vote to keep his seat vacant through to the election instead of holding a by-election. If that happens, they can only do it for 6 months, meaning the general election may actually be in winter, which is a little bit earlier than previous ones. So that's another factor, and perhaps I could cover off next year what the outlook for the market will be around election time. So if I was a buyer in the market right now, what would I be doing? Well, certainly there's opportunities for you in the market right now. If you're looking to upgrade from a smaller house to a bigger house or downsize, you've got a wonderful opportunity at the moment to make an offer conditional on selling. Look at my video blog, 3 ways to buy and sell in the same market. One of the ways in there is to buy conditional on selling your property. And if you don't get the price you want for yours, you don't have to go ahead with your purchase. Watch that video. It's not been something people have been able to do a whole lot over the last 3 or 4 years, but there's an opportunity there for people to do that now, and that opportunity might not be there next year. But you've got to buy when the time is right for you. And the question I'll ask you is, if you bought in 2008 or 2009 when the market wasn't so great, would you be worried now that we're in 2016 about what you paid then? Because there's a wonderful saying, you never paid too much for property, you just bought it too soon. Okay, because you'll ride out those peaks and troughs in the market, but while those are happening, you're in your property and you're enjoying it. If it's one to buy, to live in. If it's an investment, maybe there's a few more considerations to make. And certainly people are coming to me a lot about their investment properties at the moment, wondering if it's a good time to sell or what it'll be like in 6 months. Hey, watch my video blog last month. I'm not a crystal ball gazer, and I don't think any real estate salesperson can hang their hat on being able to pick the market. What did I hear the other day? Economists have picked 17 out of the last 3 recessions. Thought that was a good one. So thanks very much for watching my video blogs this year. It's been great doing them every month. I'll continue with them next year. Adios. Merry Christmas.